In this video, we're going to be taking a look at how to construct and use monthly points of control and a monthly value area. All right, so let's take a look. What I've got on the screen in front of you is a chart of the SPY spiders. I've got this set up to a 4-hour chart just for the previous month. So I'm going to be looking at a monthly point of control and a monthly value area. When I do that, I'll look at this. Right now I've got this set up for the previous month, which includes some of November because I'm doing this before Christmas. But I'll do this when I establish the point of control. I'll do this after the close of the last day of the month. So I'll look at just the days for that previous month. So what I've got on the right side of the screen, you can see the volume profile. This is what's going to show me the volume by price. So you're used to seeing, if you've never used that study, you're used to seeing the volume at the bottom of the screen for each particular bar, how much volume was there. The volume profile will give you how much volume is for each particular price level. So I'm looking at, this is how much, there was a big burst of volume at this price level. There was a big burst of volume at this price level. To do that, I've already got it set up, but I'll show you what I've got. If you click on Studies, right here at the top, I've got the volume profile study selected. So I'm going to leave that like I've got it set. Alright, so the other things you'll notice on this chart on the right side are this yellow line at the top. There's also a yellow line here, and then in the middle there's a purple line. The purple line is what's known as the point of control, or we call it the POC. This is the level that had, the price level that had the most volume for that particular month. Which makes sense. If you look at the chart, there was this big area of consolidation right here, and right here at this purple line is where the most volume was for the month. The top yellow line is what's known as value high. The bottom yellow line is what's known as value low. This area between this top line and this bottom yellow line is what's known as the value area. That's telling you where 70% of the volume was traded during the month. So that means between the high here all the way down to this level, which was at 313.73 right here. That means from here to here, 70% of the volume was traded. We'll talk about how to use that later in the video, but for now, what I do at the beginning when I'm trying to establish these is just write them down. I'm going to write down 319.89, which is our point of control for the month. And again, these are not going to be accurate for December. I'm doing this before the month ends. I'm going to write that down, and I also keep these in a spreadsheet. I'm going to put them on the chart, which I'll show you next, but I also keep them in a spreadsheet so I can have them for keeping. Alright, so we're going to write that down, and then next we're going to put it on the chart. So I'm going to go up to Drawing Tools, and I'm going to select Price Level. And I like to put these in for the entire month, so I'm going to start it over here at the beginning of the month. And then we'll go in and edit it. And then for the name, so I can reference it easily, I'm going to type in December POC. Then we're going to put our value in at 319.89. Then we're going to change our color and our style. We're going to put it in there. Alright, so let's go over to the daily chart. If I pull up a daily chart now of SPY, you can see that our POC line has been inserted. If you hover over the line, you'll see that it says name December POC, which we can reference later, and also the value at 319.89. So how do we use that? To give you an example, I'm going to change our chart over to GDX. This is the gold miners ETF that tracks all of the major gold mining stocks. And if you notice, I've got all of this context now on the chart. This is no longer just a blank chart, but it's got all the POCs for the past year. All of these dashed light blue lines are monthly POCs. If I hover over one, you can see that that was the August POC at this level. On the right, you'll see standard deviation levels, which I'll talk about in the next video. And you can also see here, I've got value high and value low for the current month. That's trading. So when I analyze now a chart of GDX looking at this, I'll show you a few different things that jump out to me at on the GDX chart just looking at points of control. First, you can see once our correction started here at the beginning of September, we fell hard and then retraced some and then fell hard. You'll see that it's been oscillating for the past few months in between this September POC as the high and it'll come up. The July POC is the bottom. So anyone that's looking at a chart of GDX can see that this price level, which has been hit multiple times, is now acting as support. But if you've got a POC on your chart, you can see why. Oh, that makes sense. This was a point of control. So people that, once this broke through this level in July of this year, it came back and retested it. And the same people that bought it to break it through this level, when it returned to this level, they bought it again. And when it came down to this level, they bought it again. And when it came down to this level, they bought it again. And they bought it again. So trading-wise, I can see a few different possibilities. First, since our correction has been going for the past few months, with this month, we've made our first higher low. So we've made a low here, and we've made a higher low apparently here. So between now and the end of the year, beginning of January, we've tested this POC here, which was September POC, once, twice, 3, 4 times. If we eventually break above this level before the month's out, the next most logical level to go to is this 29.58 level, the August POC. So that's one way to use it on the long side. If we break through this, which has been a short-term level of decision, if we break through it higher, we're going to go to the next one. On the flip side of that, selling-wise, this level here is an important level, obviously, the July POC. We've tested it as support once, 2, 3, 4, 5 times already. If we do break below this level, which I believe is going to happen at some point in the next 2-3 months, when and if we do break below that level, we should see a sizable flush, fear, panic, maybe, as we break through this level, because this is not only, as we'll discuss, a point of decision, but it's also a point of emotion, because without it's impossible to make a decision without engaging your emotions, as we've talked about in previous articles. So if we do break below this level, we should see some fear. We should see a little bit of panic. And also we're going to see this big wide open space where between 2609 down to 22.5, there's this big open space of no points of control, which makes sense. If you look over here on the left side of the chart, there's no consolidation. It's just basically a straight upward move that we got in June and July of this year. So if we break below this level, odds are we're probably going to go down to this level of support, which would also close this gap at 24, which I've been talking about for the last few months. So that's a sell side trade. If we get below this level, it's a good spot to short. From a trading standpoint, I also want to recognize, on the top of this chart, you're going to see a single point of control. A lot of these are just single points of control, but here in this level, between 22.55 down to 22.16, we've got a cluster of 4 POCs. This to me indicates an exponential level of support. This is where a significant decision was made in the market, whether it was hedge funds, mutual funds, whoever was buying, they made a significant decision to push price above this level. Just as you saw price come back to this July POC and get bought and get bought and get bought, if we come back down to this level again, whether it's the first quarter of 2020, I would use this to understand that people should be buying again at this level. So if we come back to this level, this is a good spot to buy in with stops, at these points of control levels. All right, so let's turn back to the value area. The value area we had for spiders, I'm going to take a look at, change our chart over to SPX itself, the S&P 500. This gives a really good example this month in particular of how to use the value area. As the chart flips over. All right, so we talked about the value area is where 70% of the volume lies that took place in a given time period. So we're looking at a monthly time period. So 70% of the volume for November for the S&P 500 existed between 3119.87 and 3067.67. So you can see this on the chart. I had this on the chart as December started. So if I zoom in a little closer, you can see our value high here and our value low here at these areas. So as price was moving up higher, I was looking for a sell-off here. I didn't know how big it was going to be. I didn't know if it was going to go down to this November point of control or possibly back down to this July point of control. But those were the two areas I was talking about on the slope were possible areas of support if we did get a sell-off. This actually happened beautifully in December. I caught some of it correctly, which is the nature of trading. So the sell-off, I got all the sell-off. We went from 31.55.5 all the way down to just below this point of control. Sell-off got down to 30.70. Was able to get most of that just with shorting SPY alone. And then we had the reversals. So when you look at the value area can be used in a few different ways. The first area I'll look at is if price either breaks into the value area at open, or if it comes out of the value area and back into the value area, it should retrace back to the opposite end of the value area 80% of the time. I'll try to say that again. 80% of the time, if price comes from outside of the value area back into the value area, it should go down to the opposite end of the value area. So when the month of December opened on December 2nd, what happened? We were initially above the value area and then we broke back into it. So what you saw happen, if I zoom in a little closer, is it broke all the way back down to the bottom of the value area, hit it, and then reversed. So we got a full move from the top of the value area to the bottom of the value area, which should happen 80% of the time. So what happened the rest of the month? The other ways you can look at value areas are support and resistance levels. So value low is a good spot to buy. Value high is a good spot to sell, is one way to look at it. Another way you can look at it is if price breaks above the value area or below it. In this case, in December, the S&P 500 broke above the value area. Then it retraced and found support there. This is a good spot again to buy, because we've broken above the value area and now we've come back in and found support at that same area. Odds are we should be moving higher after that. And you can use this support level now as a stop. So if I wanted to enter close to where this is coming back down to retest this as support at value high, I can enter long here, which I should have done, Jeff. I could have entered long here with a stop at value high and then just rode this higher for the rest of the month. So those are two different ways you can use the value area. I use that on a monthly time frame. And in the next video, we'll take a look at standard deviations, how to construct them on a monthly time frame and how to use them in our trading.